Hi traders, welcome to the new weekly forecast for the trading week beginning on 1st of December. In my previous weekly analysis, I've mentioned that gold is range bound and it was trading inside a triangular consolidation pattern. And we expected a breakout in the bullish direction, and it has exactly happened in the same way. So let's have a quick recap of the previous week's video.
We will expect a bounce, and once it breaks the triangle, the falling trend line with a valid retest. So we need to see a sharp breakout.
Now the next question is, if this breakout is sustainable, is it a real breakout or just a liquidity trap to trap the retail traders? So in today's video, I'm going to decode the chart patterns and I'll discuss about dollar index, GBP US dollar, gold, silver, US dollar JPY and Nasdaq. So as usual, let's begin our chart analysis with dollar index, and I'm going to move to monthly frame here. Now on the monthly frame, we just need to apply a reverse fib retracement on the previous leg up. So we did exactly the same thing in our previous video. So starting from this low to the high point, I'm going to use my fib retracement in the reverse order. So let's pick our retracement. 1 minute. Let's pick the retracement and apply. Done. And now we can see here that retracement level of 138.2 is acting as support. So this is the extension in the downward direction. And fib retracement 100% is now acting as local resistance, nearest resistance point. So let's highlight them. So this is the nearest level of resistance. Let's use red here. And the nearest level of support on a monthly frame is here. Let's highlight with blue here. That's it. And we can move down to weekly frame here. Now on the weekly frame, I can see that the bullish momentum is now fading out. So this is the previous leg down, ends with containing style of bullish divergence, and buyers, they enter into the market, retest 97.39 or 97.4 as the support, and the bounce goes exactly to the retracement of 100%. So in terms of price level, it is 100.44 or 45. And now I can see that the MACD is showing signs of exhaustion. And we can move to now daily frame. Now on the daily frame, based on the latest up leg here, I can see that it has now started forming bearish divergence. So we have two highs, higher high formation with MACD bearish divergence on MACD lines and histogram. Now the breakout structure level is not yet completed. So basically sellers, they need to push the price lower than 99.03 in order to take the full control from the buyers. I will use my first extension in the bullish direction on the weekly frame to check the extension in the upward direction. So this is the first move up and done. So right now we have a local support at fib extension 100%, and it is the level of 99.38. And the next breakout structure level means the next important support falls at 99.03. Now I can also use your fib extension in the bullish direction one more time. So let's use it. I'll start from second A. I'll connect second B and second C here. So in case if we see continuation in the bullish direction, the probability is low. Then dollar index is expected to hit 100.62 to 100.71. So let's highlight the zone as magnet resistance. Now keep in mind that on 10th of December, we have US Federal Reserve coming out with their rate of interest decision. And the odds are increasing in favor of interest rate drop. So basically 70 to 80% probability of dropping the rates, which means that dollar will get weaker. Now this is the latest pattern on the 4-hourly frame. So I'll bring the vertical line at point C here. And currently
I can see after this rise on the 4-hourly frame, right now, dollar index has retraced to an important level of support, and I can expect one more bounce and then moving down. So continuation lower. We can also apply here fib retracement only on the last leg up, starting from the lowest to the highest. So definitely it has fallen below the important level of 14.5 to 23.5. So this is going to act as our nearest level of resistance, zone of resistance. And the major support zone falls in between 78.6 to 85.4. So number one, I need to see this level broken by the sellers. So until it remains above 99.09, we can expect a bounce higher. Number two, after breaking this level of support, we need to see the completion of breakout structure level, which falls at 99.03. And then only we can expect a deeper continuation, basically continuation in the downward direction. Moving to the 1H, I can see that the selling activity has slowed down. So there is a probability of bullish divergence coming here. And we can expect one more bounce from the current level. So currently, we can see that the weakness has started building on dollar index, but the bearish pattern is not 100% confirmed. So it is in transition right now. Now, the next instrument is GBP against US dollar. I'll start from the monthly frame here. Now, on the monthly frame, we could see the sequence of higher highs and higher lows. So here, this is the lowest point on the monthly frame. And then I could see a new higher low, higher low, higher low in conjunction with higher highs. And I can see slowdown on MACD histogram, but only slowdown on the latest MACD histogram, but no divergence completed yet. And even MACD lines have not yet completed the bearish crossover. From the monthly frame, I'm moving down to weekly frame here. And on the weekly frame, I can see that we have the choice to apply fib extension in the bullish direction. So I'll start from the lowest point here, point A. This is the first high, point B, and this is the higher low, so point C. So let's apply fib extension in the bullish direction. So first extension applied in the bullish direction. Let's change the color to green here. We can bring our vertical line here at point C, and we can apply next extension in the bullish direction. So second extension also applied on the same time frame. And now we can move the vertical line to second C. And I get to see here fib magnet zones. So this is the strong zone of support. And this is the current zone of resistance here. Let's highlight. And that's it. I do not see divergence here. I can see higher high formation. I can see here higher high formation between the two swing highs, higher high formation on MACD lines, and higher high formation on MACD histogram, which means after this bullish leg, there should be some short-term drop, corrective drop, and then continuation higher. So let's apply fib retracement. So in order to measure the drop, we use Fibonacci retracement here. So I'll be using fib retracement from the lowest of the last leg up to the highest. And I can see that GBPUSD dropped exactly to 38.2% here. So the fib retracement completed of 38%. And now I can see slowdown in the bearish activity. And the current zone of resistance falls around 34.98, 1.3498. I can use here fib extension in the bearish direction. So starting from the highest point, the trigger point of sellers, so point B here, and this is point C in the bearish direction. So let's apply fib extension A, B, and C in the downward direction. Applied. Let's change the color to red here. And the sellers, they could extend the move up to fib extension 100 only. And now we get to see a strong level of support magnet around 1.3130. And we are experiencing a bullish bounce here. So let's highlight the zone of support here. Done. Let's use blue here. Let's move down to daily time frame now. Now on the daily time frame, I can see first leg down, corrective bounce up, and the next leg down. And in the next leg down, there was a break of support which turned into a false breakout. And now I can see that buyers, they have quickly taken the price higher, bounced again from the level of support and continuing in the bullish direction. I can see that bullish momentum is now building up on the basis of MACD histogram. So I need to measure the retracement from this high to this low. So I will use fib retracement on this leg down. So fib retracement applied. And I can see here that the strong level of support falls in between 23.5 to 14.5. So this is our nearest support zone. And the upcoming resistance zone is here in between 78.6 to 85.4. So this remains the next bearish zone. Moving down to 4-hourly frame. Now on the 4-hourly frame, I can see that there is a scope to apply bullish extension. So selling activity ended with bullish divergence here. And the breakout structure in the bullish direction completed. So this is the first move up in the bullish direction, corrective drop, and now continuation higher. So this gives the opportunity to apply fib extension in the bullish direction. Let's apply. Done. And let's change the fib extension lines to green here. So right now, buyers, they have pushed the price to extension 100, which is the level of 1.3239. And the next extension level falls at 1.618. In terms of price level, it would be 1.3360. And the extension 200 would be completed at 1.3434 or 3435, which falls exactly inside the major resistance magnet zone. So in short, the short-term plan for GBPUSD remains bullish. I can see weakness building up on dollar index, so which is a bullish sign for GBP US dollar. And in short, any drop towards 1.3165. So from the current level, if we see a drop happening towards 1.3165 or maybe slightly deeper towards 1.3107 or 3110, take it as an opportunity to buy and hold it for the first target of 1.3360 followed by 1.3435. Now I will use the vertical line and plot it on point C and move to the next lower time frame, that is 1-hourly chart. Now on the 1-hourly chart, I can see that the buyers have taken the full control. They have crossed the previous level of resistance. First move up, drop comes with equal lows and bullish divergence. Breakout structure completed. And this is the bullish move. And now I can see short-term pullback here because of the bearish divergence on the 1-hourly frame. So this will give us the short-term drop here. And I'm looking for this drop to enter into my short-term buying activity. So I'll be accumulating my buy orders from the current level until it remains above 1.3107. And then I'll be targeting the first extension of 161 in terms of price level. This would be 1.3360 followed by 1.3445. And the invalidation would be a break below 1.3107. So if we see a sharp drop and the break of the support at 1.3107, then the bullish plan would be invalidated. The next instrument is Nasdaq. Now I'll move to weekly here. Now on the weekly frame, it created the sequence of higher highs. And then it started the drop. So in order to measure the drop, I'll be using fib retracement on this leg up. So starting from the low point to the highest point.
So let's apply Fibonacci retracement on this move. Applied. And then we will move to the daily frame. Now on the daily frame, sellers, they could not break the important level of support at Fib retracement 23.6. In terms of price level, it was 24,000 mark. So in my previous video, I've explained that 24,000 is expected to act as important support, and I was expecting a bounce towards 25,000. And currently, Nasdaq is trading higher than 25,000. In fact, it is at 25,482. So which means we got the sharp reversal here, a V-shaped recovery, which is a sign of strength here, and I'm expecting Nasdaq to continue higher. Now I'll be switching to 4-hourly frame here, and on the 4-hourly frame, I will apply extension in the bearish direction first. So starting from the top, this is point A for sellers. So this is the first move down and sharp reaction up. So this is A, B, C in the downward direction. Let's apply Fib extension here. Applied. And if you notice, sellers push the price slightly lower than Fib extension 100, but buyers, they have taken over the market from the sellers. They have retested the level as strong support, and now they have pushed the price higher than this extension level. And I do not see any signs against. MACD histogram shows that bullish momentum is now building up. Apart from this, I can use a trend line in the falling direction. So starting from the highest, connecting to the next lower high. So this is the falling trend line, and the buyers, they have convincingly broken the falling trend line. Now it's a matter of retest and continuation higher. And the next target is 25,800. Now I'll be switching to the next lower time frame, that is 1H. Now on the 1-hourly frame, I'll be using Fib extension in the bullish direction. So I'll start from the lowest point. I'll connect with the first high and the higher low here. And let's change the Fib extension to blue here. And we will plot the vertical line on point C. Now, I do not see any signs against. I can see that the buyers are in full control and the bullish momentum is building up. That's it. And right now, we can say that there is a very high probability of it to move towards 25,761 to 25,800, which is the next upcoming magnet zone. Now, since dollar is getting weaker and expected to remain weaker, so it is going to give a bullish boost to the stock market, and the next level of resistance falls at 25,761 to 25,800. Switching to 15 minutes, and we can apply one more extension in the bullish direction on the 15 minutes chart. So I'll start from the vertical line, and starting from the vertical line, I'll be using my next Fib extension in the bullish direction. That's it. And I can see that we have a strong level here. So we have duplication zone here, magnet zone, and the current price is trading higher. So it means this is our closest support. In case if we see a drop, the probability is low. In case if we see a deeper pullback, unless it remains above 25,132, the expectation is that it will bounce back strongly and it will continue towards 25,800. Now, what would be the level of invalidation? Now, based on the latest move, I need to apply reverse Fib here. And the level of invalidation. Okay, now I have found 78 to 85 in the reverse order. So this is our strong zone. In case I see a daily closure below 25,000, take it as an invalidation, because now it should act as our local support. So a short-term drop below 25,000 is acceptable, but a daily closure below 25,000 would invalidate or negate our short-term bullish plan for Nasdaq. I'm moving to the next instrument, that is US dollar and Japanese yen.
So I'll start from the monthly frame here. Now on the monthly frame, it was clearly explained in my previous video, midweek video. This is the long-term bearish cycle. So we can use Fib retracement from the highest to the lowest on the monthly frame. Let's apply Fib retracement. And I could see here that buyers, they have taken the control here and they have pushed the price to the important level of Fib retracement 23.6, taken as support and then continuation higher. And currently it is trading higher than 38.2, which is the level of 152.766. And the next major resistance falls at 176. So the long-term plan is, unless US dollar Japanese yen remains above 152.76, it is expected to reach 176.52. But it will take months or years because it is on a monthly time frame here. I'll be using Fib extension in the bullish direction. Starting from the lowest point, I'll connect with the first high and higher low. And I can see here that we have a very strong monthly magnet zone. So this is our monthly magnet and currently we are trading above this. So this is to be taken as support. And the upcoming resistance magnet zone falls in between 176.52 to 180. So this is the future target. And now we can switch to weekly here. Now on the weekly frame, I'll start from the point C here. I did not mark my vertical line. Let's go back and mark the vertical line here and come back to the weekly chart. Now starting from the vertical line, we can apply our next extension in the bullish direction. So let's start from the vertical line, point A to point B, joined and extension applied. And the nearest resistance based on the extension now falls at 159.09. And we have the next ABC here. So I will start here, connect with the next high and higher low. So let's apply our next extension in the bullish direction. So next extension in the bullish direction applied. Yes, and right now we are at a level of resistance which is around 156. So this becomes our nearest magnet resistance zone and we can move the vertical line to this point here. Now we can move down to daily chart, and on the daily chart I can start from the vertical line. So this is the first leg up and the corrective move down. So we can apply extension here in the bullish direction on the daily frame, starting from the vertical line, covering the next wave up and the corrective wave down. Let's change the color to green here. So the first extension target is 161.26, but right now, okay, first let me apply the vertical line here. So let's bring the vertical line on point C. Done. Okay, now in the current move up, I can see here that it is creating a sequence of higher highs and higher lows. So here we have the lowest point, then we have a sequence of higher lows, a bullish pattern here, and we have the sequence of higher highs here. But between the last two highs, I can see the signs of weakness. So basically, when I'm comparing these two highs, H1, H2, they come with bearish divergence on MACD histogram, but not on MACD lines. So which can bring some short-term pullback and then continuation higher. So currently, US dollar Japanese yen has entered into the zone of resistance, which starts from 156.30 to 159. So this entire zone is the magnet resistance area. And due to bearish divergence, we can see some short-term drop here, short-term pullback, and then continuation higher. So I need to apply my first extension in the bullish direction on the daily chart. So let's begin. So this is the first wave up. So first extension applied in the bullish direction. I need a different color here. So maybe magenta, and we can bring the vertical line here. So first wave counted. Now I'll be starting from the vertical line and I will apply my second wave in the bullish direction. Done. And now I get to see a very strong support zone which falls at 154.82 to 154.9. So this is going to act as strong level of
support. So currently, if we get to see a drop, I'm not expecting the drop below 154.9 or 154.8. And on the retest of this level, I'm expecting the buyers to regain the control and take it further to 159.09 or maybe 160 in the coming days. So a short-term pullback and then continuation higher. Now, based on the bearish divergence, so this is H1 and H2, the breakout structure is quite deep. So it comes around 150 zone. And I can also apply here a rising trend line here. So let's connect from the lowest of the daily to the breakout structure level. And our rising trend line is intact. So that is the reason, because breakout structure in the bearish direction is not yet done. Our rising trend line is not yet compromised. So I'm expecting a short-term pullback, retest of the rising trend line, or maybe the support at 154.90 or 82, and then continuation higher. Let's move down to the next lower time frame, that is 4H. Now on the 4-hourly frame, starting from the vertical line, we can have our first extension move up, second move up, sideways consolidation, and then the breakout. So basically, to cut the long story short, because I won't be using multiple fib extensions on the 4-hourly frame, we can say that on the 4-hourly frame, buyers entered into the market around this level at 146.38, created a sequence of higher highs, and higher lows. And in this sequence of higher highs and higher lows, now I can see a very wide bearish divergence between these two highs. So the breakout structure is quite deep. And right now we can see that it is under short-term pullback. Now this pullback doesn't look promising to me. The price action is not very strong. So there could be a gradual drop, retest of 154.9, and then continuation higher. So short-term drop and then extension towards 159 or 160 is highly anticipated. Now, since dollar index has started showing signs of exhaustion, US dollar, Japanese yen to be traded cautiously. I'm still expecting one more leg up. Now, if it breaks below the rising trend line, or if it closes below 154.82 on a daily closing basis, then the bullish plan would be in trouble. So this would be the invalidation for the buying plan. The next instrument is silver. Now silver remains ultra bullish. So here, this is the monthly chart pattern, and it has now entered into a all-time high territory. So basically this was the historical high of 2011, and I can quickly apply fib extension starting from the low of 2020. So first move up and corrective move down. So we can use this as our first extension. So let's begin from the low of 2020 here. Sorry. So this is like equal bottom with divergence. So this is the first move up I want to mark. Let's apply. Sorry, wrong application. So let's start from the low of 2020. Done. Applied. And let's bring the vertical line here on point C. Now we can move to weekly frame here. And starting from the vertical line, we can pick the next extension here. I'll try to pick the bigger one. So applied, and the current magnet zone is here, which is already crossed. And the next magnet zone falls around 61, a very strong magnet. And I do not see any signs against. I can see the bullish momentum is intact. No divergence. It is creating a sequence of higher highs on price chart and higher highs on MACD lines and MACD histogram. So in short, I'm expecting continuation in the bullish direction. Now moving to the daily frame. So this area is now acting as our local support. And I can start my next count from this area. So basically bringing a vertical line here
and we can look for the next extension in the bullish direction. So let's start from the lowest point. So I'll mark my next extension here. So this is our point A on the daily frame. This is point B, and this can be taken as point C. So let's use it. Extension in the bullish direction applied, and we can bring the vertical line here. And the momentum is picking up. The bullish momentum is now intact, picking up. It's not creating any sequence of higher highs with divergence. Now on the 4-hourly chart, we'll start from the vertical line again, and I do not have the scope to apply any extension here because the wave is continuing. It is still moving on. Let's move on to 1-hourly chart. And I'll be applying from the vertical line my first point A, and we can take this as point B, and this should be taken as point C here. So this is the first move in the bullish direction, first wave on the 1-hourly chart. Let's use it. Done. And let's change the color to green here and move the vertical line to point C here. So I can see here on the 1-hourly chart, it is creating higher high sequence all over, no divergence, nothing, no damage. Right now it is at an important resistance level, local resistance. So when the market reopens on Monday, if we see a drop towards 55.36 or a drop towards 54.92, or maybe a deeper retest of 53.79 or 80, it will be taken as an opportunity to buy and enter into the buy setup for the target of 60 to 61. So any drop from the current level towards 55.36, 54.92, or maybe a deeper retest of 53.80 to be taken as an opportunity to buy, and you can hold your trades for the first target of 58.20, the next extension level, followed by 59.28, and eventually I'll be targeting the price level of $61. And now I'll be moving to gold. Now, following the chart pattern of silver, the market conditions are equally favorable for gold on the monthly frame. No signs against. I can see here that it is creating a sequence of higher highs, no damage to the bullish momentum. So everything remains extremely favorable for buyers. Just dropping to the next lower time frame, that is weekly, and applying the retracement here. So I'll be using the previous low of the weekly chart to the recent high. That's it. So from the recent high, this area, we got a shallow pullback, and in terms of price candles, so basically it retested exactly 38.2, and now I can see that a weekly closure above the zone of 14.6 to 23.6 has given the confirmation of buyers back in the business. So this zone is now going to act as the nearest strongest zone of support. So let's highlight this zone with green color, and the upcoming resistance is at 100%. So basically the starting point here, so this is at 4260, and I'll be switching to daily chart, converting back to the line chart. So basically buyers, they re-entered into the market after the retest of 38.2. They retested this zone as the major zone of support, and now continuation higher, and even the histogram has changed to bullish again. So I can apply here my Fib extension in the bullish direction, starting from the low, breaking the first high and the higher low here. That's it. And one more thing, I need to apply Fib retracement from high to low. Now this gives me the nearest level of resistance. So the nearest level of resistance, the zone of resistance would be from 4260 to 4266, and it can extend towards 4295. So this is the upcoming zone of resistance. I will bring the vertical line on point C here and move to the next lower time frame. Let's move to 4H. Now on the 4-hourly frame, in my previous video, I've drawn the triangular consolidation pattern here. So this is the triangular pattern I've talked about in my previous video, which is now broken. So buyers, they have taken the price higher. Now it's a matter of retest and continuation higher. So most likely it is going to hold as support, and I'm expecting the continuation higher. So once it breaks above 4266 to 4295 zone of resistance, the next level of resistance falls at 4311. Now I'll be using my next extension in the bullish direction. So I'll start from the vertical line and I will apply my next bullish extension here. Let's apply. And move the vertical line here. So I can see here that right now we are inside a short-term resistance zone. So I won't be surprised if we see some drop here, a corrective drop towards 4148, 4150, and then continuation higher. So in case if we see a drop or a corrective pattern on the reopening, I'm not expecting a major drop below 4150. In case if you see a deeper pullback towards 4101, again take it as an opportunity to buy. So first area is 4148. The next deeper pullback zone is around 4101, but I'm expecting bullish continuation here. Let's move down to 1-hourly frame here. Now starting on the 1-hourly chart, I'll start from the vertical line here. So this is the first move up. So basically first wave up, corrective wave down, and now it has completed the next wave in the bullish direction, and we can see a short-term pullback and then continuation higher. So we can use fib retracement here on the 1-hourly chart. I will start from the vertical line, assuming that the current high is the reversal point. So the first drop towards 4192, followed by 4175. We can expect this zone as a valid support area. So this is my first area of entry. My second area of entry would be around 4150, 4145. And my third area of entry would be around 4100 mark. And then I will hold it for the target of 4260 to 4266, followed by 4295. And once we see a break of 4300, then gold would be ready to create a all-time high, and the next target would be 4470 to 4478. So my plan remains bullish for gold. I'm not looking to short here. Fundamentally and technically, it remains in the bullish direction.
If you like my content, give me a thumbs up, subscribe to my channel, stay sharp and trade smart. I'll see you next week.